very terrible sore throat. So today we'll be seeing MCQs. So I have taken few questions, all right? So we'll see those questions in this session, all right? Let me connect to your chat window, just a minute. All right, I connected. So we move ahead with today's session. So before moving on ahead, I wish you happy Holi. All right, so you here again, Oliveboard has come up with some offers for Holi. Use this code and you can save up to 40% in all the. I think they have included all the regulatory board exams. All right, so make use of it. Once again, I wish you a happy Holi, guys. Let's move on to the class. All right. Now, the first question again, because last, I think 2 sessions, I believe, 2 or 3 sessions, we didn't see any MCQs. We have seen the concepts, all right? We have seen bonus, we have seen rights, we have seen again, in the previous class, we have seen buyback and all those stuffs. All right, so now again, I've taken few questions for MCQs. So we solved those questions. All right. Hi, FCI Tech. I don't know what's the name. So this is reflecting here. So hi. All right. So we'll go on now. First question: redemption of debenture will result in. Again, this question. See, there are 2 concepts in your chapter. One is cash flow, and one is funds flow. All right. So now, if you see the options here, here you don't see anything of financing activity, investment activity. No, instead you are seeing working capital, application of funds, sources of funds. Then what is it? Because the option here does not talk about any financing operational, because if it is a cash flow, then it is nothing but operational, because we know that there could be only 3 activities under cash flow. So what could have happened, we know. But if you see the option, it is something different. So what is it? So this question is from funds flow. All right, there is a concept in your chapter, in your syllabus, that is called funds flow. And cash flow and funds flow look similar, but the concept is little different. All right, funds flow talks about not only the cash items. It is not only talk about cash items, because cash flow is strictly to cash items, right? So we will remove non-cash items and all those things in the cash flow statement, right? But in funds flow, we will be looking on to how the working capital is, whether there is an increase. It is a comparison between the previous period and now current period. Have we increased it? Do we need more funds now? Or what are the sources of our funds now? So funds, which means it's a long-term thing. You're getting it. So from where we are getting these funds now, and you can make a comparison. All right, it is. I mean, like it's not only for the current period. You for to prepare a funds flow statement, you need two-year ka data or 2 period ka data. You're getting it. So that is called funds flow. We'll see funds flow in the next concept session. All right. So now redemption of debentures. Remember, debenture is something. First of all, understand what is meant by working capital. I have told you already in my concept building sessions also what is meant by working capital. Working capital is nothing but it's the fund you need to run your everyday activity, operational activity. That is called working capital, right? So here what I mean, so say for example, suppose you are running a business. Every day you need funds, to purchase items for your shop. Suppose you are running a vegetable shop or grocery. You need funds to buy, you need money to buy everyday grocery, right? I mean, you have to go to market, you have to buy vegetables, then only you can sell it in the shop, no? Correct. No, you'll go to wholesale market, you buy and then you will sell it, right? For that you need money. Correct, no? And suppose, say for example, today you need to pay salary, you need money. Today you need to pay for some electricity bill, you need money. Correct, no? So those things are called working capital. You're getting it. I need funds to operate. I need funds for my everyday activity. Such a thing is called working capital. Okay. So if you see formula wise, it says called current asset minus current volume is very low, is it now also? 1 minute. Let me check. I'm keeping it full only. No. Now also my volume is low. Now my volume is okay. Please respond. Is my voice is so low? I try to speak loud, talk louder. All right. Bear with me today. All right. So now, so working capital formula wise, if you see, it is nothing but current asset minus current liability. That is called working capital. Right. All right. Mm, very low. I don't think so. Every time I used to take like this only, no. 1 minute. Let me check. Audible now? Am I audible now? I don't know. Just a minute, let me check with the technical team. I'm trying to shout as much as possible. So just, I'll just continue. I don't want to waste time. All right, now, so working capital formula wise, it's nothing but current asset minus current liabilities. All right, ma'am, why are you explaining all these things? Why I need to know this? Understand. Now, debenture is current asset or current liability? No, debenture is not a current asset and it is not a current liability, because we know current liability means it will be, it is for a shorter period of time. You will issue debentures, you will borrow money from the people by issuing a debenture instrument, not for just a small, shorter period of time. Correct. Yes. So you will be doing it for what? Longer, it is for, very long period, may say for, 5 years, 10 years, all right, or for such, lengthy or such a long period, you will be issuing a debenture, right? So it is a long term instrument, it is not a current term, it is a long term instrument. So in that case, the first two options will be eliminated. You're getting it. To eliminate the options, I'm just explained so many stuffs. Remember that. All right. So working capital means it is relating to something called current asset and current liability. All right. So when I'm talking about debenture, then obviously it is not, debenture is not a current asset and it is not a current liability. So my options of working capital will be ruled out. Then I am left with three options: application of funds, sources, and none of this. Now remember, redemption means what? I am redeeming, which means I have issued earlier. Now I am paying back the money to the people and then I am redeeming the debenture, which means I am paying back my money. My funds are paid back, which means it is applied. Correct? No, applied means I have purchased, I have paid, which means I used my funds. Correct? Ma'am, what is meant by sources then? Sources means from where you will get money, how you are raising funds. That is called sources. Issue of capital, issue of debenture, sale of an asset. So all these things, it will generate funds for you. Local language, it will generate money for you. So those things are called sources. Whichever is generating money for you, that activity is called, that transaction is called sources of fund. Whichever results in outflow of fund, then that is called application of fund. You are getting it? So now, whichever is long term, again, remember that. So here, redemption of debenture means I paid back, which means I have applied my money there. So the answer is application of fund will result in application of funds. You're getting it? Next question. Net profit is 1 lakh, depreciation is 20. I think this type of question we have solved in the previous session also. Again, this question is from, cash flow, I can say. Your question, what they're asking is funds from operation. We know that we have to add back from our PAT, profit after tax, we have to add back, okay, non-cash item and all provision items, right? So now my net profit is 1 lakh though. I will add back non-cash item, that is 20k, and provision. This is provision. Which one I will mind? Ma'am, in taxes on operational activity only. No, why are you adding it back? Guys, income tax paid, I will reduce it. That I will consider. Why? Because literally I made a payment. That is called income tax paid. But provision for tax is a non-cash item. It is just a provision I made. I set aside for that. I recognized that so much of liability that may arise in the near future. So it is not a cash item. You're getting it? So I am adding it back. So now if I add back, my funds from operation would be 1,32,000. Correct? You have to adjust again from, working capital, all those things. But this question stops here. So it is 1,32,000. All right. Next one. Opening balance of creditor is 1 lakh. Closing balance of creditor is 1,50,000. So what are you trying to find out here? Again, this question is from working capital. Creditor means what? The person who, suppose I am a business. Okay, so for me, who is a creditor? To whom I owe. To whom I owe. Owe means what? I am supposed to pay. They have given me something, for that I have to pay them. You're getting it? So those guys are called my creditors. I told you are running a grocery shop or vegetable shop. Now where you are dealing with one wholesale vendor where you will say, Baba, you give me vegetables every day. Month end I will settle the amount. Every day, why need to pay every day? You give me a bill every 15 days, or in a month end you give me one bill, I will settle everything. Now that wholesaler is a creditor to you because he is giving you the vegetables without getting any money from you, just that you will be paying it in a month's time. Correct na? Suppose you are taking a house loan, right? Now bank is a creditor to you. You are purchasing for mobiles or whatever it is from your store in an EMI. Now, from which card you are using, maybe Citibank card, or HDFC card, or whatever card you are using for EMI, then that banker is your creditor. You are getting it? So now understand. Now creditor. So creditor means what? It is a short term. So definitely I am talking about short term, to current liability. It is nothing but current liability. Current liability, though I am talking about working capital. Done. Now my question here, what they are asking? They have given opening balance and they have given closing balance. There was a opening of 1 lakh and now closing of 1.5. Correct. 1.5. Now what will happen now? Closing balance of creditor is 1.5. So now how it will impact my working capital? Just a minute. Oh. All right. All right. Now remember, so now open, now it is 1 lakh and now here it is 1 lakh 50,000. Okay, so now what impact it will have on my working capital? That's what the question here. Increase in the working capital by 1 lakh, decrease in the working capital by 1 lakh, increase in the working capital by 50,000, decrease in the working capital by 50,000. How it will impact? All right. Now remember, I think this answer is not correct. Then working capital will decrease because of negative impact. 50,000. So current asset minus. No, it will increase your 50,000. So working capital will decrease. Correct. Right. So now 1 lakh 50. So what happens here? My credit and my current liability has increased. My current liability has increased. So remember that, remember, when my current liability is increasing, there are two ways to approach this question. One is from formula wise and second is logic wise. First, let me explain formula, then I'll go with the logic. Now, current asset minus current liability will give you the working capital. All right. Now remember, suppose current asset is say something and current liability is increasing though, then current asset remains the same, say for example, and current liability is increasing though, then you will be having a negative impact. You will be having a negative impact. So which means your decrease in the working capital, right? It will be decreasing. This is formula wise. Now remember, logic wise I'll tell you. Guys, when my vendor, suppose I am going and purchasing goods from my vegetable vendor, okay? Now he is giving me, earlier he is giving me 30 days credit, okay? Earlier he is giving me 30 days credit, which means every 30 days I need to pay. Say for example, every month I am paying him 1 lakh rupees. I am purchasing 1 lakh worth of vegetables from his shop, and then every 30th day I will be paying him. Now what happens? That fellow is giving me a credit period of say 50 days. Now what will happen? My liability will keep on. I no need to pay on every 30. You know, my closing liability maybe 1.2 it will come, 1.3 it will come, right? But every 50 days only I will be needing the money. Are you getting my point? Are you getting my point? So every 50 days, or I may find one more vendor who can, I'll be buying 50 and I'll be buying from 50, or I'll be buying, some more from him who can give me more credit days. So what happens? My requirement for fund, the requirement for fund will decrease there. The requirement for fund every 30 days will get reduced there. You're getting it? So this is the logic. You're getting it? And formula wise, if you go, it will have a negative impact. But if you go logic wise, and my working capital, I don't need that much of fund now, because I have a good creditor now. He is giving me good credit, good amount of credit period. So I'll be paying little later. So I don't need so much of funds within that day. So my working capital will be reduced. I mean, need for money, need for fund will be reduced from 30 days, right? 30 days means I have to pay every 30 days. Now I have some breathing space, correct? So my need for fund, the urgency of the fund has been reduced, correct? Because I have more time there. So which means there is an impact of decrease in the working capital. You're getting it? Right? Now, among the following, which one is the notional profit? This question I just included because we will keep on doing bonus, rights, and everywhere we have this. So general reserve is nothing but it is a cash reserve. Securities premium again cash reserve. CRR and debenture redemption reserve, all these are mandatory. So which one is a notional profit? These things are not profit. Which one is a notional profit? This one. Revaluation reserve is a notional profit. It is not a real profit. Ma'am, why not CRR or DRR? Guys, understand. CRR is a journal, it's a reserve you are creating because of Companies Act ka mandatory provision. The same goes for debenture redemption reserve. It is not created out of any profit or something, nothing. No, no. It is not created out of any profit, and we are not calling that as a profit reserve. No, it is a mandatory statutory reserve we are creating. Alright, so the question here is what is notional profit? So here notional profit means it's a revaluation reserve. So understand the question and then go for your answer. Next one. This one we have done in our rights class, right shares class. Book value of the shares means what? It is nothing but net worth divided by total number of shares. This formula I have given even in the class also. Please make note of it. The same example I have explained. So it's a straightforward question. Net worth divided by total number of shares. All right. Next one. Under cash settled ZAR, fair value will be taken as ZAR means stock appreciation, right? This is under ESOP chapter, employee stock option scheme. You know that there are, three methods. One is equity settled, one is cash settled, and one is hybrid model, right? So we have seen only two. Two is the main thing because the next one is that nothing but the combination of these two, and you'll be passing a journal entry there. That's it. So now they are talking about the SAR, which means it is cash settled SAR. Then fair value will be taken as on when? As on every balance sheet date. Every balance sheet date we will be taking it. It is not on grant date, vesting, exercising. It will be on the end of each financial year. That is balance sheet date, whatever the fair value of that options, that will be considered for the calculation when if it is a cash settled mode for ESOP. Suppose if it is a equity settled though, we will take as on grant date. But since the question is for cash settled, it will be as on end of each financial year. We have done a sum also, how it will come, and we have passed the journal entry also under ESOP syllabus. All right. So it is there, and I have given each model a question and an example. A full-fledged sum has been solved. All right. Next one. A machine was acquired in exchange of old machine and 20,000 paid in cash. This question is related to your PPE. All right. So here this question concept is when you are exchanging, suppose when you are purchasing an asset, not for paisa, but in kind of say exchange. All right. When you're purchasing an asset by giving an old asset. All right. Now, how do you recognize that in your book? What would be the cost of that exchanged asset? That is the concept here. So the provision clearly says that whenever there is an exchange happened, the fair value of the asset given or the fair value of the asset taken, whichever is more clearly evident, you will be taking that as the cost of the asset. That is the provision given under AS 10 PPE. All right. So now here what they are saying, I have a machine. I just exchanged it with a new machine. So now what has happened is my old machine was around 2 lakhs, but when I exchanged it at that point, the fair value was 1 lakh 50. And apart from that, I paid 20,000 rupees to get the new machine. Now, what is the cost of the new machine? I paid 20,000 in cash, I know. So that is there. Now, plus what would be the cost of the new asset because it is exchanged. So shall I take it as 2 lakhs or shall I take it as 1 lakh 50 or how is it? The provision clearly says the fair value on the date of exchange of the old machine or asset given or the fair value of the asset, taken, whichever is more clearly evident. So in this case, the clearly evident is 1 lakh 50. So 1 lakh 50 plus I have paid 20,000. So the new asset cost would be 1 lakh 70,000. You're getting it. And this concept I have explained in the notes also. I've given a sum also for this. This is coming under your accounting standard 10 PPE. Plant, property, equipment. You're getting it? This is the question from that particular concept. All right. Now next question. AS 13 is not applicable to. Again, I'll give such kind of questions. Why? Because these are all theoretical questions. You don't study theory. I know that. So that is the reason. Like this MCQs, if you study at least these types, okay, for this, it is not applicable. Aha, understood. You're getting it? So that's the reason. Again, to reiterate, AS 13 is regarding investment. How you will account the investments, how will you determine the cost of the investments. This standard is dealing with that. Now it is applicable to everybody except few cases they have given in the standard itself. So now I have given it here. What are those? First one, it is not applicable to mutual fund companies. It is not applicable to venture capital companies. It is not applicable to banks. It is not applicable to public financial institutions. You're getting it? None of the, all of the above is the answer. So I have extracted the same exact word from the standard itself. AS 13, like this you have for all the standard. AS 10 is not applicable to following cases. I hope you know bearer plans. All right. Uh, those things are not applicable, you know that. And exhaustive assets, it is not applicable, AS10. And then AS10 bearer plans is there, but for other than bearer plans it is not applicable. And then AS11, it is not applicable for certain transactions. And AS9, it is not applicable for certain things. And AS2, it is not applicable for certain. AS2 is nothing but inventory. That standard is not applicable for certain cases. So for all the standards, there is a non-applicability. So I request you to read the non-applicability because that is purely theory. It is not any numerical sum. That is purely theory. You are getting it? So here I have given AS 13 ka non-applicability. You are getting it? Now, AS10 states that one of the following assets will not be depreciated. You're getting it? So which one it is, guys? Not only AS10, even without AS10 also, if you see general accounting, normal accounting, only one asset will not be depreciated. That is nothing but land. Okay, the answer is land. Forget about AS10. AS10 has told specifically land, but I am generally telling not only AS10, even without AS10 also, generally in accountancy, land will not be depreciated because that land has an unlimited useful life. That land can be used unless until there is something, some tsunami is coming and taking away the land, that land can be used. You are getting it? So in this, ma'am, quarries. So quarries and sites have usage. See, coal mines you take or quarries to, that will be done once that everything has been extracted. So their life has been done. So that's the reason we are not talking, because quarries, sites, all those things we are not talking. We are talking about general land. You're getting it. So quarries, sites, those, extraction sites, okay, gold mines, copper mines, all those things will be coming under exhaustive regenerative resources. You're getting it. So here what we are talking about is AS10 specifically tells that for land there won't be any depreciation. Why? Because that land has an unlimited useful life. You're getting it. So we cannot, if it is a general land, suppose if you are having any usage to it, like quarry, mines, any extraction, if it is happening, then it will be depreciated. That is what AS10 talks about. You're getting it. Next one. How many methods of recognizing revenue for service as per AS 9? Again, it is particularly for service they are asking. And this is a straight question. There are two methods. One is full completely completed service contract method, and second one is proportionate method. This we have explained in the standard session itself. And I mean, like, when it will be followed, it's a, that also I have told. The notes have been given. It's a straight question. For service revenue, we have two ways to recognize that in our books. One, when I completely finish that project and then I can recognize the revenue, or if I know that I have completed 30% this year, 20% next year, another 30% next year, so then you can, recognize that revenue in such percentages. So that is called proportionate completion method. You're getting it? Next one. AS11 is applied for. Again, AS11 is for foreign transaction, forex. How do you account your transactions which has happened in foreign currencies? How do you, and it also tells us how do you translate or convert your financial statement from your foreign currency into a reporting currency. You're getting it? And how do you account your contracts, forward contracts? So these three things are the main agenda that has been dealt by AS11. Okay, and we have done this session also in our concept classes. I have explained for each thing. How do you record historical, monetary transaction, non-monetary transaction, integral operation, non-integral foreign operation, and then while you are converting, few things will be taken at historical cost, few things will be taken at closing rate, closing date rate, and so many things we have seen there. We have a table also for that, right? So AS11 clearly told, and AS11, I mean, we have studied even paragraph 46A, which says that if you have taken any loan in respect of purchasing a capital asset, then anything happens to your, any increase or decrease in your liability because of the forex, then how do you account it? So basically AS11 talks about which one? Forex. Correct. So the answer is accounting foreign transaction. That is nothing but forex. You're getting it? Inventory AS2, investment AS13, revenue recognition AS9, government grant AS12. I think this is not there in your syllabus, but I'm just writing the numbers for your knowledge, this one understanding. That's it. All right. Next one. This question is from cash flow statement. Now, opening balance of debtors. Debtors means whom? From whom I have to receive. I have made a sales to them. They have to make a payment to me. Correct. So those guys are called debtors. Now I'm just drawing it. Opening balance of debtors. I'm supposed to receive 2 lakhs. My closing balance is 1.5 lakhs, which means right now it is standing. And credit sales were 30,000, which means I have further made a sale. Correct. I have further made a sale, which is on credit, which means my debtors will be added further. 30,000. Guys, understand, I have an opening debtor, which means I am supposed to receive 2 lakh, still it is pending, and further I made a sale of 30k. So which means totally I should receive 2 lakh 30. But my account shows that I have to receive only 1.5. Then what could have happened? Somebody would have paid me. So they paid me means I have received money. So which means it's an inflow. Correct. So how much it is then? Guys, I'm supposed to, balance should be 2 lakh 30, but it is only 1 lakh 50 means. Then how much I have received then? 80,000 rupees I have received. So there is a cash inflow of how much? 80k. You're getting it? All right. How to find out? Ma'am, is there any formula, ma'am? Of course, yes. For debtors, opening debtors plus credit sales minus cash receipt is equal to closing balance. This is the formula. So you can put 2 lakhs plus 30,000 minus x is equal to 1.5 lakh. Then 2 lakh plus 30k minus this side I'm taking it 1.5 and this side it is going x. So x is equal to 80k, right? That's it. So this is the formula. You can make a note of it. Formula would be opening balance plus credit sales minus cash received will be closing balance of debtors. Logic wise, if you see, 2 lakh was my opening and I have further made a sale of 30 on credit, which means I have supposed to get 2 lakh 30. But closing balance, if you see, morning I am saying that 2 lakh 30,000 is my receivable, and evening I am saying my receivable is 1 lakh 50. Now what would have happened in between? I have received something now. So how much I have received? 80k. You're getting it? So there is a cash inflow of 80,000 rupees. Alright, I hope you guys are understanding. One of the following is an example of liquidity ratio. Yes, this is from ratio analysis chapter. There are based on the functions, or based on the interpretations, or I can say based on the nature of ratios, we can give, so we have around 4 to 5 categories. One would be solvency ratio, liquidity ratio, market ratios, and then I have what else, I think, yeah, the market yield ratios, all these things are there. So liquidity ratio, which talks about the company's quick ability to pay off their current liabilities. Current, it is just a short term. That's called liquidity. How well the company is, liquid enough to manage their current crisis or current liabilities. All right, so that is called liquidity ratio. So for that, under liquidity ratio, we have three ratios: current ratio, quick ratio, and operating cash flow ratio. Basically current and quick, and one more is there, liquid ratio. All right, so these three ratios we can say. So now the question is, which one here? So the current ratio, without any, this is a straight question, without any thinking you can say it's a current ratio. Why? Because debt equity, it is not a liquidity, because it's talking about your, solvency, I can say, interest coverage, and GP ratio, and this one, these are all talking about your P&L items. You are getting it? So these are all talking about your P&L ratios. It's not your liquidity. Liquidity in the sense how well the company can is, suppose, say for example guys, I have a land in my name. Okay, that land value is say crore rupees, but I don't have paisa to eat now. Okay, I don't have paisa to settle my monthly dues. Now what will you call me? You will say, hey, he has a property man, but he don't have any money to take care of him right now. So that's called liquidity. You're getting it? Suppose you are earning. Okay, you have purchased one house, so you have everything. In the month end, you don't have any paisa in your pocket. Okay, you wanted to go to a hospital, you don't have any money, but you have house under your name, you have bike in your name, you have car in your name. Correct. Would you, with that, would you say he's having super financial position? Will you say no? What, yeah, you have house, you have bike, you have car, but you don't have money to pay your current, hospital bill. You have to improve your emergency fund. You have to maintain some cash. You have to maintain some liquid cash in your hand. You will tell no. That is called liquidity ratio. See, I have assets. I have my assets. I have long-term liabilities. That's a different scenario. Right now, do I have an ability to meet my obligation? That will be told by which ratio? Liquidity ratio. So how do you find out? The ratio between current asset and current liability will tell me that. You are getting it. Now I have a savings account. In that I have, say, 50,000 rupees. Now I am going to a hospital. Bill is for 30,000 rupees. Yes, I can make it. Why? Because I have it in savings account. Correct? No. I have it in savings account, which means it is very much liquid. Correct, na? Suppose you invested everything in shares. Yeah, I have 5 lakhs worth of shares, man. But I need money. Would you immediately can you sell it? You will sell it in a loss. Immediately. Suppose if the market is not good, you are getting it. So that is called liquidity ratio. So that will be analyzed through your current assets and current liabilities. And that ratio is called current ratio. You are getting it. So the answer is option D. You are getting it. I hope you guys are getting it. 1 minute. I'm sorry, guys. I have terrible sore throat and cold. Again, once again, I wish you happy Holi. With this, I'll wind up the class. Make use of this offer. All right. I'll see you in the next class in the concept building session. All right. Have a great day tomorrow and have a good night today. Thank you, guys.